Welcome to Smart Stock Watch. Today is August 8th, 2025, and we're diving into TeraWulf's second quarter earnings report. TeraWulf, a leader in digital infrastructure powered by zero-carbon energy, has just released its Q2 2025 results. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. TeraWulf's report is quite intriguing, especially given the current dynamics in the digital infrastructure and Bitcoin mining sectors.
Revenue and profitability overview. Let's start with the financials. TeraWulf reported a revenue of $47.6 million for Q2 2025, a 34% increase from the previous year. However, they also reported a net loss of $18.37 million. John, can you break this down for us?
Absolutely. The revenue growth is primarily driven by an increase in Bitcoin mining capacity and higher Bitcoin prices. However, the net loss is attributed to increased costs, including a 59% rise in the cost of revenue due to greater infrastructure utilization and higher power costs. The adjusted EPS came in at nat 5 cents, slightly missing the forecast of -44.
Operational efficiencies and future outlook. Moving on to operations, TeraWulf's Bitcoin mining capacity increased by 45.5% year over year to 12.88 per second. They're also targeting 250 megawatts of HPC hosting by the end of 2026. How does this position them for the future?
TeraWulf is strategically expanding its infrastructure to meet the growing demand for high-performance computing and Bitcoin mining. Their focus on zero-carbon energy gives them a competitive edge. However, they need to manage their high debt levels, which stand at $500 million, to ensure sustainable growth.
Management commentary and strategic initiatives. CEO Paul Prager mentioned that TeraWulf is executing its strategy to develop scalable digital infrastructure. They plan to start recognizing HPC hosting revenue in Q3 2025. What are your thoughts on their strategic direction?
Paul Prager's comments highlight TeraWulf's commitment to expanding its HPC hosting capabilities. With interconnection approval for 500 megawatts and plans to increase this to 750 megawatts, they're well-positioned to capitalize on the demand for low-cost, zero-carbon compute infrastructure. This strategic focus on long-term growth is promising, but they must navigate the challenges of high operational costs and debt.
Key takeaways. In summary, TeraWulf has shown impressive revenue growth and operational expansion, but faces challenges with profitability and debt management. John, any final thoughts?
TeraWulf's strategic initiatives and focus on sustainable infrastructure are commendable. However, investors should keep an eye on their financial health, particularly their debt levels. It's a company with potential, but with risks that need careful management.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on TeraWulf's performance in the comments below.